Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and as I speak to all of you all this Monday morning, markets have given up its gains that we saw in the morning. Before I go any further, let me give you certain levels on Sensex, Nifty, Bank Nifty, Rupee Dollar and crude oil. Sensex is up about 215 points, 74,100 is the level on Sensex. Nifty Spot down about 5 points, 22,475 is the level on Nifty Spot. Bank Nifty with gains of 190 points, 49,110 is the level on Bank Nifty. And rupee dollar equation, is a little bit of weakness on the rupee against the dollar, 83.46 to $1, and the weakness is about 0.03 paise. On the crude oil front, a little bit of lower levels, but the news flow from the Middle East has pushed up marginally. $83.14 to a barrel is Brent, and $78.33 to a barrel is NYMEX. So on the rupee dollar and the crude oil, expect choppiness and volatility and a movement of anywhere between 15 to 20 paise as far as rupee is concerned on both sides. And on the crude oil front, though we are lower, comfortably lower, below $85 is Brent and below $80 is NYMEX. This is a good news for economies like India, because given the kind of dependency that we have. But expect it to cool off further to get some kind of more comfort zone and a relatively downward move rather than having choppiness on the news flow from the Middle East. For the markets, friends, if you recollect last week on Monday, we had said that we are witnessing a little bit of tiredness on the screen. Expect a little bit of pullback on the markets, and the entire week we saw a lot of choppiness and volatility. Last week, Wednesday, 1st May was a holiday, but then we came back to trade on Thursday. We had a range bound move, and on Friday, after making a new all-time high, we saw pullback on the markets, less than 1% pullback. Nifty was down 0.76%. and Sensex was down 0.96%. We are of the opinion that we are going to witness the similar kind of choppiness and volatility. And in the near term, if you ask the levels on the Nifty spot, well, 22,300 to 22,400 on the lower side, given the present events. This is for the week. And on the higher side, possibly 22,650 to 22,750 plus minus 50-60 points. Given the Q4 earnings unfolding, choppiness and volatility with respect to Middle East situation, and of course, the big election that we are witnessing unfold. Very soon we will see the third phase of election underway. Comments from political parties and leaders will keep the markets under check. So these are the kind of concerns. So expect choppiness, volatility, short to medium term. I think you see levels going beyond 22,600, 22,700. It will be prudent to book profits for all those short to medium term investors. And for long term investors, any depth closer to 22,300, 22,400 or a little bit marginally below that will be used as buying opportunity. Q4 earnings in line, no dark spots, and expect this momentum to continue. Data points from the overseas market as far as US is concerned, that overnight, last week we had a positive market on Friday for as far as US is concerned. Flows from the FI side has been on the negative side. Domestic institutions have pumped in either equally or a little bit smaller amounts. So expect this pull and push to be the order of the day. And as we approach the final stages of election and possibly the ultimate D-Day in terms of the outcome of election, that is on 4th of June, by end of this month, expect that choppiness and volatility to be at a higher level. Expiry will also be there by the last week of the month of May. That will also add to a little bit of choppiness, volatility. So just prepare yourself in case if you're a short to medium term trader. If you have the risk taking ability, follow your instincts and understanding and wisdom. If not, hence recommended profit booking as when we see levels of 22,600, 22,700. As far as numbers and earnings is concerned, expect some kind of re-rating, and that's what exactly we've seen. One case in point, we saw Kotak Mahindra Bank last week numbers unfold. Despite the regulation concern which the RBI had stepped in, numbers were much better and we've seen re-ratings. So these kind of re-ratings is likely to possibly be in the spotlight, and there's going to be stock specific moves uh, overall rather than a good healthy move on the markets. And the more we pull back at current level and current scenario, my understanding is post election and a budget coming through will have a little bit of excitement in the market. So if you want to see excitement post election, it is only prudent to see a little bit of pullback right now so that we have some excitement on the street. As always, friends, we give you two recommendations on the fundamental side from a long term point of view. First name is from the paint sector, Berger Paints. Paint industry overall has been doing well, though there are a lot of new entrants in this particular sector, but the opportunity is huge. That's why you have huge new entrants coming in with huge, big and large manufacturing capacity. Crude oil prices heading lower is much good news for the paint sector, and of course, uh, technology has helped paint companies to move from oil-based to water-based paints, which is also a cost-efficient move and margins improvement. So Berger Paint on fallback of whatever positivity in terms of government spending, infra, real estate sector, private capex, etc., etc., and of course, very strong repeat order markets for the paint sector. So Berger Paint is the first company from the paint sector, and the second one is a mid-cap IT company called Cyient Limited. We may have discussed this name earlier, but post the numbers, we expect this particular mid-cap IT companies to do well, though there was a little bit of disappointment as far as Coforge is concerned. But Cyient is one name which has been outperforming over the last maybe about 1.5, 2 years kind of time horizon on fallback earnings positivity and earnings surprises. So second name is Cyient Limited. Mind you, friends, these are fundamental recommendations from a long-term point of view. And for this, you need to have long-term investment time horizon. This is not buy today, sell tomorrow, or short to medium term recommendation. Fundamental recommendations start at current levels. And since we expect some kind of pullback on the markets, use all those levels on the lower side to add to the stocks. Thank you very much for your patience hearing, and I'll see you again next week. Till then, please do take care of yourself. Bye bye.